New York Community Bank has plummeted 80% as bankers desperately search for investors willing to buy stock in the company. Yes, that is correct. New York Community Bank, I've covered many times on this channel. 1 year after three of the biggest bank failures in U.S. history, the IMF is warning of a new financial crisis. The bank sector is unraveling. First, its trading in the NYCB, New York Community Bank, was halted to prevent a crash. Second, rating agencies downgraded NYCB credit status to junk. Another one is their other regional bank stocks are down 40%. And lastly, the Fed program that stopped the last crisis is being shut down. Almost 400 regional banks face failure as the commercial real estate market is collapsing. Contagion threatens to crash the entire financial system, causing a potentially devastating impact on retirement savings. As the banking crisis reignites and global conflicts flare, gold is hitting record high levels with no signs of stopping. I've been telling you about it since it traded at 1800. You can go back in our history and check it out. Now, what does that mean for you and I? Gold is a time-tested safe haven asset that's trading at an all-time high. And by the way, you can safeguard your future from economic collapse. If you're not invested in gold, check it out. There's a link below. Now's the time to learn how to secure your portfolio with physical gold and silver. Or not. You can gamble at the markets. Link below if you want to check that out again. Greg and I have done this ourselves. It's really interesting to me that gold's at an all-time high, as well as the S&P. This literally has never happened before. You've got smart people on both sides playing the equivalent of the pass and the dope pass in a casino game of craps. That's what's happening right in front of our eyes right now. So who's right? Which bet is right? Well, recently I shared with you that execs like Jamie Dimon, Mark Zuckerberg, and Jeff Bezos have unloaded billions of dollars of their own stock in their own companies. So where are they parking their money? Another company? No, they're not investing in another company. No chance. Right now, people are looking for safer plays. And it's showing with the rallies in gold and Bitcoin. Both of them are at all-time highs. It's really wild times that we've never seen before. But let's get back to the bank failures. There's a systematic risk of large-scale bank failures in the U.S. in 2024 due to charge-offs and write-downs emanating from the commercial real estate sector. Bank regulators have been vocal about their concerns that the too-big-to-fail banks would have sufficient capital to cover losses and a recession. However, they do not appear to be as concerned about how the projected losses will impact the large number of community banks in the country. Now let's unpack this. Generally, community banks are defined as banks with less than $10 billion in assets. That encompasses most U.S. banks, probably the one you bank at. More than half are in rural communities of less than 50,000 people, and often they are the only bank in town. Community banks are particularly vulnerable to loan losses due to the size relative to the capital held. Already this year, Deutsche Bank, Arizora Bank, and other publicly traded banks have had to dramatically increase their loan loss provisions related to U.S. commercial real estate exposure. Commercial real estate write-offs have the potential to destabilize the banking sector. Yes, losing a major, systematically important bank would cause global ramifications. However, losing a large number of community banks could impact a region or the entire country. Commercial real estate lending is taking a huge hit. It's been massive. First, the commercial borrowers were propped up during the COVID-19 pandemic by what we all remember as the Paycheck Protection Program and other government interventions that infused capital into them, and that's why we have inflation. Those efforts meant that fewer businesses fail than in a normal cycle. The recoil from these programs will produce the opposite effect, a larger number of business failures until things normalize. Consumer credit had a similar experience. COVID-related assistance lifted many individuals' credit ratings, but in an unsustainable way. Higher delinquency and default rates now reflect that. Second, low occupancy rates in commercial real estate have worsened the losses. This trend is not just happening in large cities. Many smaller communities are at their lowest occupancy rate in many years. The National Association of Realtors has reported a record high vacancy rates among properties. Compounding this, new commercial building slowed during the pandemic, but resumed last year. Now, in a large national economy, different banks and regions have their own problems. So let's take New York City, for example, where there's rent-regulated residential buildings that might be an issue for some lenders. However, the crux of this whole problem is that the office building component. Offices around the country recently hit a new vacancy record. As the owners fail to pay their banks, charge-offs at the banks have dramatically increased and are still accelerating. As the Federal Reserve noted in its November 2023 Financial Stability Report, a correction in office property valuations accompanied by even a mild recession could result in significant losses for a range of financial institutions with sizable exposures, including some regional and community banks. That's what this is all about, and even insurance companies, you guys. This information was largely gathered from my subscription to Barron's, one I think is very important to read. I gathered all that and spit it out to you on that YouTube channel, and for me, it's very eye-opening. You're not diversified in your holdings right now, you need to do it because almost a year ago, Greg and I talked about this, and we've been covering these avenues. Early subscribers who took action, pat yourself on the back, because you probably bought gold when we first told you at 1,800 and Bitcoin in a $30,000 range. Now, you've got a huge head start on other folks, but for the rest of you other folks I'm talking to, it's not too late to get into what's going to be a massive shift of wealth globally. Now is the time to diversify your portfolio. Look at outside investments. Gold, silver, Bitcoin are all good ones. I'm in all three because right now there's a major prediction that banks will collapse. I've been talking about it for months. NYCB is very unstable. It's on the news every single day for a reason. It's not doing good. Diversify your portfolio. There's a link below if you want to check out where Greg and I invested, which is gold. We added that to our IRA and some for home use. Check it out. Diversify. Protect yourself. We are not in good times.